We got to get over to Wilf right now on Morgan Stanley results.
Yeah, just crossing as we speak, Andrew, and revenue, a nice beat, 11.7 billion. The forecast was for 10.7. EPS has come in at 166. The forecast was 128. So a pretty clear beat on both lines. Perhaps not quite to the scale on those headline numbers as the Goldman Sachs beat, and that's largely because the asset management division for Goldman Sachs was such a big beat. Let's go through the individual lines. Investment banking, 1.7 billion. That was in line with expectations. Trading, a little better than expected, 1.9 in fixed income, 2.3 billion in equities, both a little ahead of expectations, and also I think puts them in equities, which is important to them, slightly ahead of Goldman Sachs for the quarter, which wasn't the case last quarter. Goldman Sachs was 2.1, they've got 2.3 billion. There's always a bit of competition there between the two on that level. Global wealth management, which of course is such a core driver for Morgan Stanley now, 4.6 billion. The forecast was 4.5 billion. Fantastic print either way, but yesterday Goldman's print on asset management was a really big beat. Morgan Stanley has a different business model there. They don't have the same level of equity investments, which was an area that they talked about on the call yesterday for Goldman that was valued up. So perhaps we could have expected that difference in terms of scale of beat, but nonetheless a very strong number there in global wealth management. And investment management was a nice little beat there, 1.1 billion. The forecast was for 855. It looks like compensation expense fractionally above expectation, also non-compensation expense, but largely in line with what was expected. The shares, let's have a look, are up fractionally in the pre-market. Other banks are down in the pre-market, so I think it's a relative slight outperformance. And week to date, Morgan Stanley shares were up 3.5% coming into this, so holding on to their outperformance for the week so far.
Shepard Smith here. Thanks for watching CNBC on YouTube.